Join me as I dive into the challenge of creating the perfect stock market strategy for 2025 using only the trends and data I have right now. Having a winning stock market strategy is crucial in today's fast-paced financial landscape. It's the difference between making money and losing it, between achieving your financial goals and struggling to make ends meet. A winning strategy is not just about making a quick buck, it's about building long-term wealth and security. When it comes to investing in 2025, the challenges are numerous. For one, market volatility is at an all-time high. The stock market can be unpredictable, and prices can fluctuate rapidly, making it difficult to make informed decisions. Economic uncertainties are also a major concern. With global events like the pandemic, trade wars, and political instability, it's hard to know what the future holds. Additionally, the rise of new technologies and industries has created new opportunities, but also new risks. It's getting harder to stay ahead of the curve and make sense of the noisy market data. And let's not forget the emotional aspect of investing. Fear, greed, and bias can all play a role in our investment decisions, leading to impulsive mistakes. In this complex environment, a successful stock market strategy needs to be well thought out and adaptable. It's not just about picking a few hot stocks, it's about having a structured approach that takes into account your risk tolerance, investment goals, and market conditions. A winning strategy involves diversification, not putting all your eggs in one basket. It involves staying up to date with the latest technology trends, from artificial intelligence to renewable energy. And it involves rigorous market research, analyzing data, and identifying patterns. One successful strategy that I've been following closely is the core satellite approach. The idea is to divide your portfolio into two parts, a core of stable, long-term holdings, and a satellite of more speculative, high-growth investments. This approach allows you to balance risk and potential returns, while also keeping your portfolio aligned with your goals. Another strategy I've seen work well is the factor-based approach, which involves identifying specific characteristics like value, momentum, or size, and building a portfolio around them. By combining these different factors, you can create a more balanced and resilient portfolio. I want to share a case study that illustrates the power of a winning stock market strategy. Take the example of a tech investor who focused on cloud computing in 2020. By identifying this emerging trend and investing in cloud-based companies, they were able to ride the wave of growth and profits. Of course, there were risks involved, but by doing their research, diversifying their portfolio, and staying flexible, they were able to adapt to changing market conditions and come out on top. In conclusion, having a winning stock market strategy is essential in 2025. It requires a combination of diversification, technology trends, and market research, as well as the ability to adapt to changing circumstances. By following these principles and staying focused, you can build a portfolio that will help you achieve your financial goals. Thanks for watching, and don't forget to leave your thoughts in the comments below. What's your approach to creating a winning stock market strategy? Let me know, and if you want to learn more about investment strategies, check out my other videos. Join me as I try to navigate the wild world of cryptocurrency investing and see if I can actually make money in 2025. Cryptocurrency investing has become an increasingly popular topic in recent years, and for good reason. With the potential for huge profits and a growing market, it's no wonder why so many people are jumping on the bandwagon. But what does 2025 hold for cryptocurrency investors, and how can you get in on the action? I've talked to many people who are interested in investing in cryptocurrency, but they're held back by fears and misconceptions. One of the biggest concerns is volatility. We've all seen the headlines about cryptocurrencies like Bitcoin and Ethereum experiencing massive price swings in a single day. It's enough to make even the most seasoned investors nervous. Another major concern is the risk of scams. With so many new coins and projects popping up, it can be hard to separate the legitimate opportunities from the fraudulent ones. Additionally, many people think that you need to be some kind of tech expert to invest in cryptocurrency, or that it's only for young, wildly risk-taking investors. These misconceptions can be intimidating, and they often deter people from taking the leap. But the truth is, investing in cryptocurrency is more accessible than ever, and it's not just for tech-savvy millennials. With a little education and the right strategy, anyone can invest in cryptocurrency and potentially reap the rewards. Finally, there's the misconception that cryptocurrency is a bubble waiting to burst. I've heard people say that it's just a fad, and that it's not a real investment. But the fact is, blockchain technology is here to stay, and it's changing the way we think about money and finance. So, how can you get started with investing in cryptocurrency? One strategy is long-term holding, where you buy a coin and hold onto it for an extended period of time. This strategy requires patience and discipline, but it can be a great way to ride out market fluctuations and realize long-term gains. Another strategy is day trading, where you buy and sell coins within a single day. This strategy requires a lot of market knowledge and quick reflexes, but it can be a thrilling way to make some quick profits. You could also consider diversifying your portfolio by investing in a variety of different coins and assets. This strategy requires some research and risk management, but it can help you spread your risk and increase your potential returns. And with emerging trends like decentralized finance and non-fungible tokens, there are more opportunities than ever to get involved in the cryptocurrency space. One of the most exciting predictions about the future of cryptocurrency is the expected mainstream adoption of blockchain technology. As more and more major companies and institutions begin to incorporate blockchain into their operations, we're going to see a massive shift in the way we think about money and finance. It's going to be a wild ride, and it's not too late to get on board. Another key insight is the rise of new altcoins and decentralized applications. With the increasing popularity of decentralized finance, we're seeing a whole new generation of coins and projects that are changing the game. It's an exciting time to be involved in cryptocurrency, and I'm excited to see what the future holds. In conclusion, investing in cryptocurrency is a complex and multifaceted topic, but it's definitely worth exploring. Whether you're a seasoned investor or just starting out, there are opportunities to make money and be a part of this exciting new world. Just remember to stay informed, do your research, and make educated investment decisions. So, what do you think about cryptocurrency investing? Do you have any questions or concerns? Let me know in the comments below, and be sure to check out my next video on the best cryptocurrencies to buy in 2025. Thanks for watching, and I'll see you in the next video. Join me as I take on the challenge of mastering my money with personal finance and budgeting. Let's see if I can turn my financial chaos into a well-organized plan. In this video, you'll learn the essentials of personal finance and budgeting that can transform your financial life and help you reach your goals. Many people struggle with managing their finances, leading to stress and financial instability. Have you ever felt like you're drowning in debt, or that your money seems to vanish into thin air? You're not alone. In fact, a recent survey found that nearly 70% of Americans are living paycheck to paycheck. It's no wonder that financial stress is one of the leading causes of anxiety and depression. One of the main reasons people struggle with their finances is because they don't have a clear picture of where their money is going. They might have a rough idea of their income, but when it comes to expenses, it's a mystery. Sound familiar? This lack of transparency can lead to overspending, debt, and a never-ending cycle of financial insecurity. Another common issue is having unrealistic financial goals. You might say to yourself, I want to save $10,000 this year, but have no idea how you're going to make that happen. Or, you might be saving money, but not allocating it towards your most important goals. Without a clear plan, you're unlikely to achieve financial success. Finally, many people fail to prioritize their spending. They might be wasting money on unnecessary subscriptions, or blowing their entire paycheck on lavish vacations. By not setting financial priorities, you're leaving your financial future up to chance. Let's talk about effective budgeting strategies that can help you take control of your finances. The first step is to track your expenses. This might seem tedious, but trust me, it's worth it. By seeing where your money is going, you can identify areas where you can cut back and make adjustments. Once you have a clear picture of your spending, it's time to set financial goals. What do you want to achieve? Is it paying off debt, building an emergency fund, or saving for a big purchase? Whatever your goals are, make sure they're specific, measurable, and achievable. Next, create a realistic budget that works for you. Don't try to follow someone else's budgeting plan. Instead, focus on creating a customized plan that takes into account your unique financial situation. Another key strategy is to automate your savings. Set up automatic transfers from your checking account to your savings or investment accounts. This way, you'll ensure that you're consistently setting aside money for your goals, without having to think about it. The 50/30/20 rule is a game changer when it comes to budgeting. The idea is to allocate 50% of your income towards necessary expenses like rent, utilities, and groceries. 30% should go towards discretionary spending, like entertainment and hobbies. And finally, 20% should be dedicated to saving and debt repayment. This rule can help simplify your budgeting process and lead to better financial decisions. By following the 50/30/20 rule, you'll be able to prioritize your spending and make progress towards your goals. Remember, budgeting is not about depriving yourself of things you enjoy, it's about making conscious financial decisions that align with your values and goals. It's also important to note that budgeting is not a one-time task, it's an ongoing process. As your financial situation changes, your budget should too. Be flexible, and don't be afraid to make adjustments as needed. Mastering your money takes practice and discipline, but with the right tools and strategies, you can achieve financial security. Don't be discouraged if it takes time. Every small step you take towards financial freedom is a step in the right direction. If you enjoyed this video, be sure to check out my other videos on personal finance tips and share your budgeting experiences in the comments below. Join me as I take on the challenge of flipping my first property and see if I can turn it into a fortune with real estate investment. Real estate investment, it's the ultimate path to financial freedom and building wealth. I mean, who wouldn't want to wake up every morning knowing that their money is working for them, generating passive income and securing their future? That's the power of real estate investment, and today, we're going to dive into the world of property investing to explore the endless opportunities it has to offer. I know what you might be thinking: real estate investment? That sounds complicated, expensive, and risky. And you're not alone. Many people have misconceptions about real estate investment, thinking it's only for the wealthy or that it requires a ton of knowledge and experience. But the truth is, anyone can get started with real estate investment, regardless of their financial situation or background. Of course, like any investment, there are risks involved, but with the right mindset and strategy, the rewards can be life-changing. One of the biggest misconceptions about real estate investment is that it requires a ton of upfront capital. While it's true that some investments do require a significant amount of money, there are many ways to get started with little to no money down. For example, you could start by wholesaling properties, which requires little to no upfront capital, or you could partner with other investors to split the costs. The point is, there are always options, and it's up to you to explore them. Another challenge people face when considering real estate investment is market volatility. We've all seen the headlines: market crashes, housing prices plummet, and so on. But the truth is, real estate investment is a long-term game. It's not about making a quick buck, it's about building wealth over time. And if you're smart about it, you can even use market downturns to your advantage. And then, of course, there's the fear of the unknown. Many people are intimidated by the thought of dealing with tenants, maintenance, and property management. But the truth is, these are all manageable tasks, and there are professionals out there who can help you every step of the way. Plus, the benefits of real estate investment far outweigh the drawbacks. Residential, commercial, rental properties, the options are endless when it comes to real estate investment. And the best part is, you don't have to be an expert to get started. You can start small, with a single-family home or a condo, and work your way up to more complex investments like apartment buildings or commercial properties. The key is to educate yourself, do your research, and find a strategy that works for you. Take, for example, rental properties. Renting out a property can provide a steady stream of passive income, and with the rise of short-term rental platforms like Airbnb, the opportunities are endless. You could also consider fix and flipping, where you buy a property, renovate it, and sell it for a profit. Or, if you're feeling ambitious, you could try your hand at development, building a property from the ground up. One of my favorite real estate investment success stories is that of a couple who started out with just a single-family home. They rented it out, used the income to pay off the mortgage, and then repeated the process with another property. Fast forward a few years, and they had built a portfolio of over 20 properties, generating a six-figure passive income. It's stories like these that remind us that real estate investment is not just about making money, it's about building a better life. Sarah, a single mom from California, was struggling to make ends meet. She had a low-paying job and was living paycheck to paycheck. But then she discovered real estate investment. She started small, with a single-family home, and slowly began to build her portfolio. Today, she's a multimillionaire, living in her dream home, and traveling the world. Her story is a testament to the transformative power of real estate investment. Real estate investment is not a get-rich-quick scheme, it's a long-term strategy for building wealth and financial freedom. It requires patience, persistence, and a willingness to learn and adapt. But the rewards are well worth it. So, if you're ready to take control of your financial future, then join me on this journey into the world of real estate investment. Thanks for watching, and I'd love to hear from you. Have you had any experiences with real estate investment? Share your stories in the comments below. And if you're new here, consider subscribing for more videos on real estate investment and other wealth-building strategies. Join me as I dive into the challenge of making money while I sleep. Let's explore these passive income ideas together. Passive income is a concept that's often misunderstood, but it's an attractive financial strategy for many people. The idea that you can earn money without actively working for it is a game changer, and it's something that can completely transform your financial life. When it comes to achieving financial freedom, one of the biggest challenges people face is trading their time for money. Whether you're an employee or an entrepreneur, your income is often directly tied to the number of hours you work. And let's be real, there are only so many hours in a day. This approach to earning a living can be limiting, to say the least. Another challenge is that traditional income sources often come with a ceiling. No matter how hard you work, there's only so much you can earn in a given month or year. And once you've reached that ceiling, you're left wondering what's next. This can be frustrating, especially if you're trying to build wealth or achieve long-term financial goals. The problem with relying solely on active income is that it's unpredictable and can be affected by factors outside of your control. If you lose your job, experience a medical emergency, or encounter any other unexpected event, your income can dry up quickly. And if you're not prepared, you can find yourself in a financial bind. The truth is, building wealth and achieving financial freedom requires a different approach. It requires thinking outside the box and exploring alternative income streams that can generate money without requiring your direct involvement. Real estate investing, for example, can provide a passive income stream through rental properties or real estate investment trusts. Creating digital products, such as ebooks or online courses, can also generate passive income through sales. And dividend stocks can provide a regular stream of income through dividend payments. Another passive income idea is affiliate marketing, which involves promoting other people's products or services and earning a commission on each sale made through your unique referral link. Peer-to-peer lending is another option, where you lend money to individuals or businesses and earn interest on your investment. One particularly effective passive income strategy that has proven results is creating an online business that sells digital products. For example, you could create an online course teaching others a skill or sharing your knowledge on a particular topic. Once you've created the course, you can sell it and earn passive income from royalties. One success story is of a person who created an online course on photography and was able to earn over $10,000 in passive income in just a few months. The beauty of this strategy is that it can be scaled up or down depending on your goals and resources. And the best part is that once you put in the initial work, you can earn passive income for years to come. Another compelling testimonial is from someone who invested in dividend stocks and was able to earn a steady stream of income each month. This allowed them to quit their 9-to-5 job and focus on pursuing their passion. In summary, the key to making money while you sleep is to explore alternative income streams that can generate money without requiring your direct involvement. By diversifying your income streams, you can build wealth and achieve financial freedom. If you found this video helpful and are interested in learning more about passive income ideas, be sure to check out my other videos on financial tips and strategies. And don't forget to comment below on which passive income idea resonates with you the most. I'd love to hear your thoughts. Join me as I dive deep into the current trading and forex markets to figure out what's really going on right now. The current state of the trading and forex markets is more important than ever. With so many changes happening on a daily basis, it's crucial that we understand these trends and adapt quickly to stay ahead of the game. Traders are facing a number of challenges in the current market environment. One of the biggest hurdles is volatility, which seems to be increasing by the day. Whether it's sudden changes in stock prices or wild swings in currency values, it's never been more difficult to predict what's going to happen next. Geopolitical factors are also playing a major role in market fluctuations. With tensions rising between major nations, even the slightest hint of conflict can send shockwaves through the markets. And let's not forget about the ongoing trade wars, which continue to impact global trade and economic growth. Another challenge traders are facing is the abundance of mixed signals. On the one hand, central banks are keeping interest rates low to stimulate economic growth, but on the other hand, inflation concerns are starting to rise. This has led to a lot of confusion among investors, who are struggling to make sense of it all. In addition to these challenges, there's also a sense of uncertainty surrounding the global economy. With slower growth in major economies like China and the US, many are wondering if we're on the verge of a recession. All these factors combined make it a very difficult time to be a trader. When we take a closer look at recent trends in both trading and forex markets, it's clear that some key currencies are dominating the headlines. The US dollar, for example, has been on a tear lately, thanks to a strong jobs market and rising interest rates. The euro, on the other hand, has been struggling due to ongoing economic worries in the EU. In terms of economic indicators, GDP growth rates are being closely watched by investors. With many countries experiencing slower growth, it's clear that the global economy is facing some significant headwinds. Another key indicator is inflation, which has been rising in some countries but remains stubbornly low in others. One of the most interesting trends right now is the rise of cryptocurrencies. After a brutal bear market last year, many cryptos are starting to make a comeback. Could this be the start of a new bull run, or is it just a temporary reprieve? Only time will tell. According to many experts, the current market environment is ripe for a major correction. With valuations at all-time highs and economic growth slowing, some are predicting a significant downturn in the markets. But others argue that central banks will do everything in their power to prevent a recession, even if it means printing more money. One thing's for sure, the next few months are going to be crucial in determining the direction of the markets. Will we see a continued bull run, or a sharp correction? One thing's for sure, it's going to be a wild ride. To summarize, the current trading and forex markets are incredibly complex and challenging. With volatility at an all-time high, geopolitical tensions rising, and mixed signals everywhere, it's never been more important to stay informed and adapt quickly. Thanks for watching, and don't forget to share your thoughts in the comments below. If you want to learn more about trading strategies and how to navigate these complex markets, be sure to check out my previous video. See you in the next one. Join me as I dive into the world of peer-to-peer lending to see if it really can revolutionize crowdfunding like everyone says. In this video, you will explore how peer-to-peer lending is revolutionizing the crowdfunding landscape and what it means for investors and borrowers alike. Traditional crowdfunding methods often rely on intermediaries like banks or middlemen, which can drive up costs and make it difficult for certain borrowers to access funding. This can be a major issue for individuals or small businesses with limited credit history or unconventional business models. These borrowers may struggle to secure loans from traditional sources, leaving them with limited options. In addition, traditional crowdfunding platforms often take a significant cut of the funds raised, which can be a major deterrent for investors looking for a decent return on their investment. Furthermore, the process of raising funds through traditional crowdfunding can be slow and arduous, leaving borrowers in limbo for months or even years. Lastly, traditional crowdfunding methods often require a lot of marketing and promotional efforts, which can be time-consuming and costly for borrowers. The limitations of traditional crowdfunding methods are clear, and it's time to explore alternative solutions. Peer-to-peer lending, on the other hand, offers a more direct and efficient way of connecting borrowers with investors. By cutting out the middleman, peer-to-peer lending platforms can reduce fees and make the process of raising funds faster and more accessible. This means that borrowers can get the funding they need quickly, without having to jump through hoops or pay exorbitant fees. So, how does peer-to-peer lending work? Essentially, it's a platform that connects borrowers directly with investors. This means that borrowers can create a campaign and pitch their idea to a network of investors, who can then choose to invest in the project. Because the platform is online, the process is much faster and more efficient than traditional crowdfunding methods. Borrowers can set their own interest rates and repayment terms, giving them more control over the funding process. At the same time, investors can browse through a range of projects and invest in the ones that align with their interests and investment goals. The benefits of peer-to-peer lending are clear. Not only does it provide faster and more accessible funding, but it also offers lower fees and more flexibility for borrowers. For investors, it provides a unique opportunity to invest in projects that they believe in, while earning a competitive return on their investment. With peer-to-peer lending, the entire process is more transparent, efficient, and cost-effective. One of the most compelling success stories in peer-to-peer lending is the rise of platforms like Lending Club and Prosper. These platforms have enabled thousands of individuals and small businesses to access funding that they would have otherwise been unable to secure. In fact, according to recent statistics, peer-to-peer lending has grown by over 100% year-on-year, with millions of dollars being invested through these platforms every month. This growth is a testament to the transformative impact that peer-to-peer lending is having on the crowdfunding industry. Another success story is the story of a small business owner who was able to secure funding through a peer-to-peer lending platform. Despite having a solid business plan and a proven track record, this individual was unable to secure funding from traditional sources. However, through peer-to-peer lending, they were able to raise the funds they needed to grow their business, creating jobs and driving economic growth. The success of peer-to-peer lending is not limited to individual borrowers. It's also having a profound impact on the broader economy. By providing access to funding for individuals and small businesses, peer-to-peer lending is helping to drive economic growth and job creation. At the same time, it's providing investors with a unique opportunity to invest in innovative projects and earn a competitive return. In summary, peer-to-peer lending is revolutionizing the crowdfunding landscape by providing faster, more accessible, and more affordable funding options for borrowers. At the same time, it's providing investors with a unique opportunity to invest in innovative projects and earn a competitive return. Peer-to-peer lending is not only solving existing problems in the crowdfunding industry, but it's also opening up new opportunities for financial growth and community support. By cutting out the middleman and providing a direct connection between borrowers and investors, peer-to-peer lending is creating a more efficient, transparent, and cost-effective system for raising funds. Thanks for watching, and I'd love to hear your thoughts on peer-to-peer lending in the comments below. Don't forget to check out my other videos on innovative financial trends. Join me as I take on the challenge of achieving financial independence sooner than I ever thought possible. Financial independence, it's a phrase that's thrown around a lot, but what does it really mean? To me, it means having the freedom to live life on my own terms, without being tied down by financial stress or uncertainty. And I'm not alone. More and more people are waking up to the importance of achieving financial independence in today's economy. With the rise of the gig economy, job insecurity, and the increasing burden of debt, it's no wonder people are looking for a way out. One of the biggest barriers to achieving financial independence is debt. It's like having a weight tied to your ankle, holding you back from reaching your full potential. And it's not just student loans or credit card debt, it's mortgages, car loans, and personal loans too. The interest rates can be crippling, making it seem like you'll never be able to pay them off. And then there's the fear of investing. It's easy to get caught up in the idea that investing is only for the rich, or that it's too complicated, too risky. But the truth is, investing is one of the most powerful tools we have to achieve financial independence. Another misconception is that financial independence means being rich. It doesn't. Financial independence is about having enough money to cover your expenses, and having the freedom to choose how you live your life. It's about being able to pursue your passions, rather than just taking a job for the paycheck. And it's about having a sense of security, knowing that you're prepared for whatever life throws your way. But for many people, financial independence seems like a pipe dream. They think it's only for the lucky few, or those who have inherited wealth. But I'm here to tell you that's not true. So, how do we overcome these barriers and start moving towards financial independence? For me, it all starts with budgeting. Now, I know what you're thinking, budgeting sounds boring, and it's definitely not the most exciting topic. But trust me, it's essential. By tracking your income and expenses, you can identify areas where you can cut back, and start allocating your money towards your goals. And it's not just about cutting back, it's about being intentional with your spending. Are you spending money on things that bring you joy, or are you just mindlessly throwing money at the latest trends? Another key strategy is saving. And I don't just mean squirreling away a few dollars here and there, I mean saving seriously. Whether it's through a high-yield savings account, or a retirement fund, saving is essential to achieving financial independence. And then there's investing. I know I mentioned it earlier, but it's worth repeating, investing is a powerful tool that can help you grow your wealth over time. It's not just about throwing your money into the stock market and hoping for the best, it's about doing your research, and making informed decisions about where you put your money. So, what does financial independence look like in practice? For one person, it might mean being able to travel the world without worrying about how they're going to pay for it. For another, it might mean being able to pursue their passion project full-time. Whatever it looks like, one thing is clear, financial independence is within reach for everyone. Take, for example, the story of Grant Sabatier, who went from having just $2.26 in his bank account to saving over $1 million in just 5 years. It's an extreme example, maybe, but it shows what's possible when you combine discipline, hard work, and the right strategies. As I look back on everything we've covered, I'm reminded that financial independence isn't just about the money, it's about the freedom, the security, and the peace of mind that comes with it. By following the strategies we've discussed, and staying committed to our goals, we can all achieve financial independence sooner than we think. And I want to leave you with a challenge. What's the one thing you can start doing today to move closer to financial independence? Share your goals with me in the comments below, and if you want to learn more about financial strategies, be sure to check out my next video. Join me as I dive into some serious tax strategies to see if I can boost my wealth and save big this year. Effective tax planning is crucial to maximizing your wealth and minimizing your tax liabilities. It's not just about crunching numbers, it's about making smart financial decisions that can have a significant impact on your financial future. That's why today, we're going to talk about smart tax planning. When it comes to taxes, many people make mistakes that can cost them thousands of dollars. One common mistake is waiting until the last minute to file taxes. This can lead to errors, missed deductions, and even audits. Another mistake is not taking advantage of tax-advantaged accounts such as 401s and IRAs. By not contributing to these accounts, you're missing out on potential retirement savings and tax benefits. Many people also fail to itemize their deductions, resulting in missed opportunities for savings. And finally, some individuals don't stay organized, which can lead to lost receipts and missed tax credits. Additionally, many people don't consider the tax implications of major life changes such as getting married, having children, or buying a home. These changes can significantly impact your tax situation, and understanding how to navigate them can make a big difference in your financial situation. In the next section, we're going to explore the SMART framework and how it applies to tax planning. The SMART framework is commonly used in goal setting, but it can also be applied to tax planning. The acronym stands for specific, measurable, achievable, relevant, and time-bound. In the context of tax planning, being specific means identifying specific tax savings goals, such as reducing your tax liability by a certain percentage. Measurable means setting specific metrics to track your progress, such as tracking your tax savings over time. Achievable means making sure your goals are realistic and attainable, based on your current financial situation. Relevant means ensuring that your tax planning goals align with your overall financial goals. And finally, time-bound means setting specific deadlines for achieving your tax savings goals. For example, a SMART goal for tax planning might be to reduce your tax liability by 10% within the next 6 months. This goal is specific, measurable, achievable, relevant, and time-bound, and can help you stay focused and motivated to achieve your tax savings goals. Another way to apply the SMART framework to tax planning is to set specific goals for each area of your tax situation. For instance, you might set a goal to maximize your deductions, minimize your tax rate, or optimize your tax credits. By setting specific, measurable, achievable, relevant, and time-bound goals for each area, you can create a comprehensive tax planning strategy that helps you achieve your financial goals. One powerful strategy for enhancing your tax planning approach is to take advantage of tax loss harvesting. This involves selling investments that have declined in value to offset gains from other investments, reducing your tax liability. By doing this regularly, you can minimize your tax burden and maximize your wealth. For example, let's say you have a stock that's declined in value. By selling it, you can use the loss to offset gains from other investments, reducing your tax liability. This strategy can be especially powerful if you have a large portfolio with multiple investments. By regularly reviewing your portfolio and taking advantage of tax loss harvesting, you can save thousands of dollars in taxes over time. By applying the SMART framework to your tax planning and taking advantage of strategies like tax loss harvesting, you can create a comprehensive tax planning strategy that helps you achieve your financial goals. So, remember to stay focused, motivated, and disciplined in your tax planning efforts, and you'll be on your way to maximizing your wealth and minimizing your tax liabilities. In conclusion, smart tax planning is essential to maximizing your wealth and minimizing your tax liabilities. By avoiding common mistakes, applying the SMART framework, and taking advantage of powerful strategies like tax loss harvesting, you can create a comprehensive tax planning strategy that helps you achieve your financial goals. Thanks for watching, and I'd love to hear about your own tax planning experiences in the comments below. If you like this video, be sure to check out my other videos for more financial tips and strategies. Join me as I take on the challenge of completely transforming my finances in just 30 days. Taking control of your finances, it's that one thing that can make all the difference in your life. It's the key to achieving financial freedom, and ultimately, peace of mind. When you're in control of your finances, you're able to make conscious decisions about how you want to live your life, and that's incredibly empowering. Debt, budgeting issues, and lack of savings, these are just a few of the common financial challenges that people face every day. We've all been there at some point or another, stuck in a cycle of financial stress, wondering how we're going to make ends meet. It's exhausting, and it's frustrating, but most of all, it's demotivating. You start to feel like you'll never be able to get ahead, like you're just going through the motions of life without any real direction or purpose. The truth is, most of us are just one unexpected expense away from financial disaster. We're living paycheck to paycheck, with no safety net to fall back on, and no clear plan for the future. And it's not just individuals who are struggling, entire families are affected by financial stress, and it can lead to some really tough decisions and sacrifices. But here's the thing, it doesn't have to be this way. You have the power to take control of your finances, to break free from the cycle of debt and financial stress, and to start building a better future for yourself and your loved ones. So, how do you take control of your finances? Well, it starts with creating a budget, a realistic one that takes into account your income, your expenses, and your financial goals. You need to track your expenses, to see where your money is going, and to identify areas where you can cut back. And then, you need to set some financial goals, both short-term and long-term, and create a plan to achieve them. One powerful tip that can significantly change your financial situation is the 50/30/20 rule for budgeting. This rule says that 50% of your income should go towards necessary expenses like rent, utilities, and food, 30% towards discretionary spending like entertainment and hobbies, and 20% towards saving and debt repayment. It's a simple yet effective way to allocate your money, and it can make a huge difference in your financial health. By taking control of your finances, you're not just improving your financial situation, you're also improving your mental and emotional well-being. You're reducing stress, you're increasing confidence, and you're achieving a sense of financial freedom that's hard to put into words. In this video, we've covered the importance of taking control of your finances, some common financial challenges that people face, and some practical steps you can take to improve your financial health. Don't let financial stress hold you back any longer. Take action today, and start building the financial future you deserve. What are your financial goals? Let me know in the comments below. And if you're ready to take your budgeting skills to the next level, be sure to check out my next video on budgeting tips. Thanks for watching, and I'll see you in the next one.